David Nelson joins us from Belpointe Asset Management. David, good morning. We had a big rip yesterday. Are we going to follow it through into the weekend here?
I'd like to believe that, but I have no guarantee of that. Look, it's that time of the year, so markets tend to drift higher in here, but anything could disrupt this. We've seen some pretty big trades in the last couple of days, some pretty big reversion to the mean trades. Monday was a real knocker. That was probably one of the worst reversions to the mean trades I've seen since 2022.
The ring of the bell at the NYSE by President Trump going to be worth a couple points?
Maybe. Let's see. We've already gotten a lot. We had a Trump bump right after the election. Not just price momentum. We actually saw earnings estimates climb higher, maybe $4 or $5.
Is that enough to justify the move in the indexes, David? What's your gut tell you? Are we over our skis?
I don't think we're over our skis, but we need to see those estimates continue to move higher. We've watched the multiple expand from about 17 at the beginning of this bull market in 22. We're now above 22 times blended earnings. So we need to see that earnings acceleration because that's the good news. The bad news is that we're not going to get as much help from the Federal Reserve as we thought we were. Back in September, we were looking for at least another 150 basis points of accommodation between now and March. Maybe we get one more next week because they kind of locked themselves into that. But I think first quarter next year, we may not get any.
Okay. Can we trade big tech without rates? Is that where you go if you're not certain about the economy or the Fed? Just bet on AI and all of its after effects?
I think you're going to continue to see a broadening out, and I don't think you can paint all the Mag 7 names, the same. They're very, very different. Nvidia is clearly different, and it's really most of the earnings acceleration is in that one single name alone.
How come it's stuck? What's going on, you think, since earnings?
Maybe digestion at this point. I think everybody's looking for the next Nvidia, and I think what the bears get wrong on this, there may not be another Nvidia. It's not easily to replace this company. Everybody's looking for the bigger, the faster, maybe the cheaper chip. But it's not just a chip company. It is an ecosystem. And those software tools, the coding, the support that comes along with it, that's not easily replaceable by AI engineers. They're not likely to shift unless they see something really compelling.
For sure. NVIDIA 137 right now. When you think about the general exposure of your clients and where they want to be, does the index adequately allocate right now? David, should we be comfortable in concentrated positions?
I think that's really the challenge. I think everybody's looking. I think you could see a real big rebalance at the first part of the year. Some of these names, even some of the mid-cap names, have just through the roof. A lot of names that are over 100% year to date. So I think you will see some reallocation. And I think the good news is that gap in growth in earnings between the Mag 7 and the rest of the market, that's contracted. It's only going to be about 4% next year. This year was 68% growth in earnings for the Mag 7, only 9% for the S&P 500. So the trade made sense. Next year it's less compelling.
Yeah. Tom, jump in on NVIDIA in particular here, because it does kind of remind me somewhat of what the crypto people call FUD, fear, uncertainty, doubt, that I hear about NVIDIA to David's point, about, there's going to be competition. I don't think that's the case at all.
Well, they've tried. AMD's failed already.
Yeah, a lot of them are failing. The other thing, too, is there's just been this kind of peppering of headlines. What does their supply chain in China look like? Or, are the racks too hot? Stuff that, maybe has been able to kind of keep the price more tame than what we're used to.
Yeah, and, I think exhaustion, right? Still up 175% so far this year. There's a little bit of exhaustion. And then you look at the overall market, as David mentioned. I mean, everything's going up right now, right? We're just below all-time highs. So people are picking other areas for momentum in the near term. 5 of the Mag 7s were at all-time highs yesterday. So maybe they're just using, maybe taking profits from NVIDIA at this point. But if you think it's going to go up, there's option strategies that'll do it because implied volatility levels, while the stock is off all-time highs by about $15, implied volatility levels low. So I looked at a strategy here. If you think it's going to rebound, give myself some duration, right?
Okay.
Because this might play out. David mentioned that we might see a pullback in early January. That might happen, right? Because we're at elevated valuations at this point. So went out to the January 31st weekly cycle. So 50 days to expiration. Going to avoid earnings. Earnings comes in latter stages of February. But if you think it's going to rebound, maybe run back up to those all-time highs, this strategy takes advantage of it, where I'm going to buy January 31st, the 135 strike call, slightly in the money. Then against it, sell the 150 strike call. So a bullish $15 wide call vertical to the upside. I'm paying roughly about $5.60 debit for it. Takes my break even just above $140 over the next basically 7 weeks, right? So that's about 3% above the current share price. So you don't need
level it's been having some trouble with.
Yeah, it's about a third the width of this bullish vertical. And if you think it's going to go back to all-time highs by the end of January, this takes advantage of it. Your break even just above 140. You only need a 3% move to the upside to get above that break even, where you start seeing profitability.
You're not asking too much.
No.
You're looking forward to get on the other side of this line that it has been going back and forth on at 140. Right. Let's talk the ripper of the group here, though, the ballistic move in Tesla. David, what do you think? Vertical, basically, if not to something like parabolic in Tesla.
Hard to justify Tesla on valuation alone. In fact, you have to look out pretty far with aggressive assumptions to justify half the price. But, Oliver, stocks don't trade on fundamentals alone. If that were true, Apple would be trading about 80 points lower. In Apple, you're paying for that ecosystem. You're paying for the future. And when you get Elon Musk, that's what people are buying here. And the fact that he's now embedded in the Trump administration. And one more fact, GM just pulled out of robotaxi. The kind of ceding the space really to Elon. And if they pull that off, that's a subscription model. Just look at software. Subscription models get insane valuations. So not owning it has been pretty costly for PMs for the last 12 weeks.
Very true. Tesla, you think, is deserving of a big pullback? Is it going to be a rocky road, David?
Look at this. That could happen anytime. We've seen it happen several times. I've traded it on and off over the last couple of years. I've probably lost more money than I've made. I got in it just before the election, and it's paid off this time. But my position isn't even what the S&P 500 is right now. It's actually grown to over 2% of the S&P.
Okay, so it is worth a little of the volatility, though, to have some piece, it sounds like that. Thanks, David. Appreciate your perspective.
Thanks for having me.
You got it. David Nelson.